Hello, and thank you for joining us for an important discussion on the second round of PPP. I'm Angie Elliott, Vice President of Member Engagement and Small Business for the Wichita Regional Chamber of Commerce. And the Chamber has been curating discussions on a wide variety of topics, and we're really fortunate to have the assistance of our Chamber board members to moderate these discussions. Today, we have board member Andrea Scarpelli, and she will be our moderator today. Andrea is the Executive Vice President and Senior Credit Officer at Emprise Bank. Both Andrea and Emprise have been longtime supporters of the Chamber, and we're really excited to have her expertise on today's call. So without any further ado, I'm going to turn it over to Andrea, who, along with all of our panelists today, have been living and breathing PPP loans for a month now, and she's going to use her skills to guide us through our conversation. Hello and welcome, Andrea.
Good afternoon, guys. Thanks very much for being with us. This is my first real Zoom meeting where I've actually left my video on, so this is a rare event. So we'll move forward and try to keep moving today as we can. Angie's already introduced me. One of the things that I'd like to, one of the things that we talked about early on was how each of us were individually involved in the PPP process. From our institution's standpoint, we have been an SBA preferred lender for years, so at the opportunity to become a PPP lender, it was a very easy decision for us to make. I think one of the things, and we'll talk about it as we go through on more than one occasion, is this is absolutely a Herculean effort on everyone's part. When we talk to Wayne and we talk about the things that the SBA has done locally and across the country, when we talk to Doug and understand all of the people that he's been able to support and the things that he's done, when we talk to Robin and understand the impact that this has had in our community across what we do, I think it's just really important for each of us to recognize that we are in completely uncharted territories. And it's really easy for people to be critical, and it's really easy for people to feel like they're being slighted. And I just want to make sure everybody recognizes that I have not been involved with anyone in this process, no matter what institution or what entity, that is not giving 110% at every moment for this. So it may not feel like it, but I hope all of you recognize the amount of effort that's going into trying to make sure that everyone gets the funding that is needed today. So without that, I'm just going to introduce people as I see them on my screen and let you introduce yourselves and give just a little bit of background, and then we'll jump into some questions. So Doug, you're first up on my screen.
Yeah, great. So my name's Doug Criscitello. I've worked in and around the U.S. Small Business Administration for much of my career. I spent 10 years as a career civil servant in the federal government, and my final position was as SBA's Chief Financial Officer. Since then, I've been very involved with SBA lenders, various SBA initiatives through the years, and right now I'm helping clients of Grant Thornton understand and access the Paycheck Protection Program.
Very good. Thanks, Doug. Wayne, I think you're next.
Thank you, Andrea, and good to be with you this afternoon. I am Wayne Bell, the District Director of the U.S. Small Business Administration here in the Wichita District. And it's been a great honor to serve our business owners in this area. Certainly been very, I don't know how to summarize it, but it's really been incredible, the amount of impact, the amount of dire need that our business owners have in the area. And certainly, again, it's been a privilege to be in a role where we can help and we can give businesses the much needed help that they need. It's great, by the way, to get to meet Doug, understanding his history as a CFO within the SBA. Looking forward to the dialogue and looking forward to sharing information. But certainly, again, great to meet him in this way.
Great. Good to meet you.
Great. Robin, I think you're the last one.
Thank you, Andrea. I'm Robin Needham, and I am with Emprise Bank. I am Senior Vice President of Small Business Lending with the bank, but I've been involved with the SBA program since 2010. Well, actually back in 2003. I've been a business owner most of my adult life and started using the program back in 2003 in private business, and then joined in banking in 2010. So I really have been involved on the side of helping with process implementation, helping customers understand what they need to put together, and just wade through the PPP process application.
Very good. So I think our first question today talks really around the second round of PPP funding. We know, Wayne, and we'll direct this question at you, we know that the numbers have been impressive through the first round, and the second round of funding just kicked off yesterday. So with just a little high-level overview, can you tell us how many customers were served in the first round, and then what we think is going to happen in the second round?
Thank you, Andrea. So we know in the first round, there were a number of businesses that were served, and I think our total amount, just getting it down to Kansas, there were roughly $4.1 billion worth of loans supported in that first round of PPP. And I think the volume was over 20,000 applications, or 20,000 businesses that ultimately were able to access those PPP loans. But obviously, the need remains, and there are a number of businesses that still yet need this capital to help with the operations and sustaining their operations. I don't have numbers after the first day, but here's what I do know. I know that virtually every commercial lender across the state has access to SBA's loan portal. We worked through that during the first phase, and there probably are yet still just a handful that within their institutions, perhaps there was a user or two who, for whatever reason, couldn't access the system. And again, we've been able to work through those issues on a case-by-case basis. So again, virtually every lender has access to the system, but what we observed yesterday is what our Office of Capital Access referred to as pacing the amount of applications that were allowed to go into the loan portal. And we understand that that led to probably a pretty good amount of frustration because it was different from the first phase. First phase, once a lender had access, they were off to the races. The reason behind the pacing this time around is to make sure that every bank, our community banks, all of our lenders around the state, and in Kansas, that's a big deal. We've got over 200 community banks. And so it's important that all of those lenders have access to the portal and they have access to that system. And so this pacing has created another step of disruption in what was expected to be a very quick process. But it's for good reason, and again, it was intended to allow more access to all of our banks so that we didn't have businesses ultimately that may have been left out because their institution couldn't get into the portal. So that's what I know of the first day. In total, I should have those national numbers in front of me, but I believe we were over, ultimately we supported $345 billion or so of loans in that first round, and I know that was over 1 million borrowers. And certainly, we're aware of some of the national companies that may have had a national affiliation or public, trading. Some entities of that fashion being able to participate in the program, and that's not the way it was intended. And I understand Secretary of Treasury as well as the SBA, they're on a case-by-case basis, they're dealing with those entities, and in fact, we're already hearing of some entities that are paying the funds back or intend to. So that's what I know at the moment, and I'll pause there.
Robin, I think that kind of leads us to our next question, and some of the thoughts that anyone can answer certainly is that there has been a high level of frustration from this program from both the bank's perspective and from the borrower's perspective. Again, we spoke to it early on. It has been a Herculean effort that has happened basically overnight, very unprecedented. But what are some of the things that you would share either with banks or with borrowers that we've learned from the first round that would help us as we move forward?
Thank you, Andrea. First, the program, when it was put in place back on April 3rd, the government has the right intention to help all small business owners. The problem is that as they were trying to implement this program, there were several changes, and that's not anyone's fault. It was just trying to figure out processes, how this is going to work, how's it going to work with SBA, going ahead and being the conduit to get the money out to the borrowers. And so there were a lot of different miscommunication as far as going back to the borrowers or to the institutions as far as, okay, this is what we need, this is what we need now. So I think there was just a lot of confusion at first because it was such a mad rush to get that money out. Now that we've had, over a month to have the program in place, I feel like everybody is more understanding of what their processes are. They know what they need to get from borrowers and get that information together. I think as the second round opened up, a lot of institutions were able to go ahead and put those applications in place. So then once the E-Tran or portal was open, they could then submit those and get the borrowers their money. So I think that it seems a lot more calmer. We're not seeing a lot of different changes. And I think Doug had mentioned this a little bit earlier, now we're going to start looking at what's that forgiveness question. So from that side, I think that we've really just figured out the process and it's much more calm now.
Good. So Doug, that takes us to the next question, and we think about what customers need to provide. And I know there are different requirements for different types of lending groups, and I know that you can't speak to all of them, but at a high level, what information does a business really need to provide to be prepared to get this type of a loan?
Yeah, I think it's important to understand the intent. I think we've all got it. It's called the Paycheck Protection Program, so it's sort of obvious. But I've spoken with hundreds of small firms that are trying to get assistance under this program, and some of them are viewing it as a capital infusion. And as any savvy small business person would do, they're thinking about ways to most effectively utilize the funds. That's a bit contrary to what the intent of these dollars are. The goal here from a public policy perspective is to rather than to lay off your workers, let's keep them on the payroll and have the federal government step in and pay for them for 8 weeks. So really what we want from firms is we want some record in the past. How much have you spent on payroll? Typically during 2019, what was your average monthly payroll? Plus some overhead expenses added to that. And we're flipping that average into the covered period for the loan, this 8 weeks, by multiplying it by 2.5 times. So that'll cover 2 months of your payroll plus some overhead. And so we expect you to have records that can evidence that that was in fact your average monthly payroll.
Very good. Thank you for that. As we talk about continuing the process and knowing that time is of the essence, Robin, one of the questions that comes out very frequently, and Wayne, I know you hear this as well, is how do lenders process their applications? Do they process them the way they come in? Do they process them by the people they like the most and then work their way down? And I know there's a lot of emotion around this subject. So can you speak to that a little bit?
I will go ahead and jump in. As far as the intent, as Doug just said, the intent of the program is to help with payroll. And that is, as far as at Emprise, we are trying to serve as many businesses as possible. There isn't a determination as far as who gets what first. We're just trying to help small business because we do care about small business. As far as what other lending institutions do, I don't have any comment on that because I would not know. But again, it's just been, there's been so many applications, as we've talked about, that it's just been overwhelming, I think, on every front.
Right. Wayne, did you have any thoughts around that directly? I believe you're on mute if you're speaking. He may have dropped off. We'll give him just a minute to come back online and we'll continue to move forward.
Could I ask Robin a quick question?
Absolutely.
Robin, have you seen much in the way of interest for regular 7A loans right now versus the Paycheck Protection loans?
Robin, were you able to hear that?
Doug, part of it.
Yeah.
The
I think,
question was around activity around regular 7A today versus payment protection.
Yeah.
well, we are slowed down somewhat because a lot of businesses are on stay-at-home orders right now, or they're just closed their doors. However, we do have some businesses that are growing, and we did go ahead and work on some to make sure that they had funds secured because we did not want them to not be able to get their 7A loans done.
Yeah, well, that program isn't receiving all that much attention, at least in the financial press right now. And SBA is going to pick up monthly principal and interest for 6 months for loans that are made between now and September 27th. So, I think it's worth having on the radar screen.
Right. Can you all hear me now?
Yes. Yeah. Welcome back.
Okay. So a couple of points here. Doug is spot on. For those businesses that are situated, perhaps they're providing, as an example, maybe personal protective equipment in the medical industry, or they've identified some other opportunity that despite the economic conditions, right now they've got an opportunity. Those avenues through our traditional 7A program, I mean, this is 6 months of deferred payments, 100% of guarantee on SBA Express. There are really great incentives for businesses that are situated to where they have an opportunity. So I would encourage them to visit with lenders. The other thing, I want to go back to just a quick second on the Paycheck Protection Program. Again, Doug is spot on this. The intent of that program literally is to cover payroll expenses and moderate overhead expenses so that businesses can sustain and be on a path to recovery while we deal with this pandemic. That's not the program for a business that has this opportunity on the horizon and needs capital right away to take advantage of it. That's not the vehicle. And that has been a bit of an education process for those borrowers who perhaps are looking and may have an opportunity or just want capital to cover other operating expenses. So those are points I do think are worth, kind of echoing. And also, Robin mentioned, again, and I said this a second ago, but it is first come, first serve in terms of those applications. And that's one of the reasons that this pacing approach has been implemented this time around with the accepting of our loan applications or those loan applications. Again, it's intended to give these smaller institutions, these smaller lenders, the opportunity to compete and get their applications in so that the larger institutions wouldn't, take the significant share of the volume of loans. And so I'll pause there. Doug looks like he may want to interject something there too.
No, I agree. I agree. That's exactly it. Again, if this program didn't exist, we'd see lots of folks flooding the unemployment insurance rolls. Instead, there is wisdom to this policy. Let's see if we can, keep small businesses intact for a couple of months, and hopefully we can push past this pandemic.
I I completely agree. I think oftentimes, and you guys have both spoken to different ways that the SBA is working through this pandemic, not just with Paycheck Protection, but it's important for us to recognize that as a government agency, there really has been a lot of thought process put into deferment of 7A payments. The 504 program has also had some payment relief for the next 6 months. There's lots of opportunities that the government is working through the SBA to help small businesses continue to remain viable. I hope that as a country, we don't lose sight of all of the important things that are happening just because somebody didn't get what they needed as the moment they thought they ought to have it. So I really appreciate those comments and want to make sure, Wayne, that you understand from my perspective personally and also from my organization's perspective, we are firmly in your camp and very much appreciate all of the work that your agency continues to do.
Thank you. Thank you so much.
You're welcome. So let's think a little bit around some of those businesses again. And Doug, one of the things that our economy continues to change around is we have a lot more independent contractors now than potentially we would have had 10 years ago or 12 years ago. Can you give us just a real brief highlight over how those independent contractors are treated in this program?
Right. So independent contractors are eligible for the Paycheck Protection Program. One program we haven't mentioned is the Economic Injury Disaster Loan Assistance that's provided through SBA. So it comes back to, you can't really do both. You can't use loan proceeds for the same purposes. But independent contractors should be looking at both at the Paycheck Protection Program to pay themselves for 2 months plus some overhead. And also consider the disaster loan program, because the first $10,000 of an economic injury disaster loan are conveyed as a grant, as an advance grant. So sort of almost no strings attached to that program. So I think ultimately that's the first order decision that firms need to make. Do I seek funds under PPP, or should I consider applying for a disaster loan? Wayne, do you have thoughts on that?
Yeah, thank you, Doug. So the economic injury disaster loan, you're right, it has broader applications. And so for independent contractors and even other forms or entities, really ought to consider that program if they've got other operating expenses that they really need help covering. It goes beyond what we can do in the Paycheck Protection Program, and then the loan is ultimately calculated based on a projection of 6 months of those operating expenses for the business.
Yeah.
Here's the difference. So with the Paycheck Protection Program, those proceeds or those revenues can be accessed pretty quickly. I mean, from the time the applicant applies to the time those funds are dispersed, you're probably looking at, I'd say, 10 days, 2 weeks or less, depending on the institution and how much backlog they have. That could really get turned around pretty quickly. However, with the economic injury disaster loan, what we've experienced and what we have observed, that's a little longer for the borrower. I mean, you're probably talking about minimum of 3 weeks before that economic injury disaster loan or the EIDL advance, the $10,000 that Doug was just speaking about, probably about 3 weeks before that amount is going to be deposited. And then probably another week or two before the EIDL loan is ultimately paid out. Yeah. And that's certainly been a source of frustration for those applicants and business owners that have applied. The communication has been fairly limited, which I completely understand the frustration around that. But what we've been able to do is provide any applicant with the information needed in terms of the customer service information, also what to expect next. We've got some inside information basically where we have been successful at telling borrowers kind of what to expect at each phase. If you've seen that your credit has been checked, if you have a credit monitoring service and you see that there's been a hit more or less on your credit by the SBA, then pretty quickly a deposit is about to occur, or you're moving along in the process. And then once that deposit occurs, there's other messaging that we've been able to share that kind of gives that borrower a heads up on what's next. So if you've got those kind of questions, please reach out to us. We'll continue to share that information. But understand it's not as quick a process. And here's where I think if an applicant works closer with their lender, perhaps there's a loan fund, whether it's an express bridge loan through the SBA or some other short-term loan that they could utilize while they're waiting on the economic injury disaster loan. I think that would be a good strategy.
Hey, just one point of clarity, because I misspoke a bit. So the advance component of the disaster loan is up to $10,000. So
That's
SBA
right.
has been using $1,000 per employee. So if you had 5 employees, you get an advance of $5,000. But it's up. It's
Absolutely
up to 10. Yep.
So as we kind of talk about that and transition to another topic, we've talked a lot about how we use the money from a paycheck protection perspective, making sure that our borrowers understand that the predominant reason for these loans is to keep their employees employed and for them to move forward with a small portion of overhead that it goes along with it. As we think about how then people are going to get some forgiveness from these transactions, I think that's the point where Doug and Wayne, I'd like for you to just spend a minute and talk about it. We appreciate that some of the road work around that is still in process and completely understand that.
Yeah.
Isn't that a good way of putting it?
That's a great way to put it.
It is a great way to put it. So, but as lenders, one of the things that we're trying to provide good counsel for our borrowers, and I know that our borrowers have entered into these transactions with the hope of having as many of the dollars forgiven as possible. Can you at least give us a high-level understanding of how that forgiveness plan is going to work?
Sure. Can I take a crack at it?
Yes, please, Doug.
So there's a dual test in terms of documenting that you did, in fact, keep your payroll relatively intact. The first test is a head count test. So during the 8 weeks in which you're operating, the covered period as it's known, and when you're operating with PPP funds, you're required to hold your number of full-time equivalent employees at a steady level relative to what it was in January and February of this year, or relative to a comparable period from last year. So that's the first test. You hold FTE steady. Once you've solved that, you then move to the second test, which is holding wages roughly constant with what they were in the last full quarter. So right now you'd be looking at January through March of 2020, and you're allowed to have a bit of a reduction in wages, but not more than 25% your average monthly payroll from earlier this year. And you need to meet both of those tests in order to have full forgiveness of the loan amount.
Wayne, do you have any
Yeah,
comments?
I think that's an excellent summary. I really do. The things that come to mind in addition to that, the head count number initially is literally on the number of team members you have, employees you have. But then it changes over, you know, as part of the forgiveness, it changes to FTE, full-time equivalent. And so that is something that's important to note. And I think the only thing I would add is that essentially the intent is that the payroll cost would virtually equal at the end of the 8 weeks. And certainly the borrower will need to work close with their lender. Perhaps if you're using a payroll service, that kind of thing, those records are going to be critical to provide to your lender so that ultimately you can get the forgiveness, you know, part of this. The other thing too that's important, we get a lot of questions about this. So the bank, the lenders have 10 days to disperse the loans. And from a borrower standpoint, as soon as those funds are available, you are to bring your people back, you know, on board. And I think there's been some, you know, again, as Doug indicated, Robin, I believe, may have indicated this as well, business owners are savvy and looking for a way to, you know, best navigate this for them. But the intent of that program is to get people back to work. And so I really caution any of our borrowers out there who are delaying bringing their people back, because you certainly don't want to forego that forgivable eligibility. And so you want to get them back to work as soon as possible.
Hey, one additional point of clarity on something I said. So the wage test, you can't reduce wages by more than 25%. That applies only to employees making less than $100,000 a year. So that's an important caveat on that. I guess if you want to cut wages of folks who are making more, then that would be permissible. Be nice to maybe see some additional SBA guidance on that. But that's the way the statute is structured.
I'm going to invite Robin to say something here. Robin said something that I had to smile after she said it initially. So here's the difference as well right now. A lot of guidance in the first round of PPP, we literally, guidance was coming out day by day. And so there were some things that we learned, you know, just kind of late in the process. The advantage this time around, a lot of detail, a lot more detail is established. The lending community is better prepared. So the time is now. If there is a business that is interested, do not wait. These funds won't make it another probably 2-3 weeks, and they're going to be exhausted. So I just encourage the lenders, the borrowers or business owners to reach out to their lenders now and learn more about it and submit an application if you're interested.
Yeah, to give you a sense, I actually did a little research on the number of small firms with employees in the country, and it's about 6 million. So SBA, in the first round of funding, they did a little less than 1.7 million loans. You know, there's still 4.5 million firms out there, right? That want to take advantage of this program. So
wow.
So you're absolutely right. The time is now to apply if you have an interest.
So Robin, I'm going to send the next question directly to you then. As a lender and as you're counseling people who have either already applied or who are in the process of application, and you're talking about the things that are the most important to them, what's 2 or 3 pieces of advice that you would give someone as they're sitting down thinking about this process now?
Making sure that they know what the money is to be used for. I think Doug and Wayne both have really outlined this very well. It's to be used for payroll. That was the intent of the program. So to keep people employed and working. I know I've had questions about people, well, what do I do if we are at a stay-at-home order? And that's a great question, but as the statute currently reads, they are to use that money once it's they are given the approval 8 weeks after they receive it. So, then they start thinking, well, what do I do about that? So I've had them think about, is this money that you need right now? I've had some SBA customers who are getting that 6 months of loan payment by the SBA, which is fantastic. So then walking through that, do you need the PPP money right now? Or is maybe an economic disaster loan better? Really just walking through what makes the most sense for them in their business.
Okay. And as you think about the funding process, Wayne's already indicated that once you've received an approval, the time starts to tick around a funding process. Have you noticed either in our institution or in other institutions across the community, do you feel that the banks have been able to step to the plate to do that?
I do. I know at first it was a little bit disconcerting because you thought it was first 5 days, and thankfully they did extend it to 10 days in the first go round. We're very thankful for that. And it seemed that the banks were able to all pull together and as a team, from what I've heard, work together to make sure that those loans get closed and the money gets out there. I know that they're, especially if it was a, with you knowing your customer, there's all those rules we have in banking. So that was some of the things on the back end when it comes to closing loans that we have to make sure we have all that correct information.
Yeah, it was, and I know in the first round, there were questions even down to what note is allowable. And so, yeah, there were a lot of details that just for the speed of getting the program up and getting the funds available, there were a lot of details that in the first round that literally continued to roll out as we went along. So, yeah, I think the structure's in place. I agree with you, Robin. Extending that to 10 days probably made everybody's life a little better. So the lender has 10 days to disperse funds. And again, from a borrower standpoint, the clock starts when those funds are dispersed. You've got to have your folks back to work so that you don't impact that forgivable, 8 weeks. And so I think what Robin just pointed out is a very important question. If you're already a client that has other SBA loans or another SBA loan, you've got 6 months that the SBA is making those payments. So this, again, back to the point that Doug made earlier, this may not be the right product for you. Maybe there's another option, and especially if there's an opportunity on the horizon. So I'll pause there.
Guys, I think that we've had a really good round of discussion today, and I want to make sure that as we finish up, everybody has the opportunity for any final comments. And I think one of the things that I would suggest that we do is that if you had the opportunity to tell business owners something that you haven't already shared with them regarding either the pandemic or the PPP program or just life in general, what word of advice or encouragement would you have for business owners that we have today? And Doug, I think I'll start with you.
Well, for business owners, I would say hang in there. The old saying, small businesses are the backbone of this country. It's never been more true. I think the respect that small firms have here, I'm here in Washington, D.C., just being viewed as, the champions that are going to pull us through this pandemic. So stick with it. Don't be too frustrated with SBA. I can't think of an organization that could deal with a surge. The surge that we're talking about at SBA, it's 100-fold their normal business. So I think they're doing a fantastic job under really trying circumstances. So, work with SBA, hang in there, and we're all going to get through this.
Very good. Thank you, Doug. I appreciate your time today. Wayne, what kind of comments would you have to wrap up?
Well, thank you, Andrea. And I would just echo some of what we've heard. First of all, keep fighting. You guys who are observing this right now, you bring the creativity, the innovation, the passion, everything that it takes to be successful in business. This I know is a very difficult time, but it also presents opportunities if you're able to recognize them. And there have been business owners that have been able to pivot and provide services or products that are in need right now. So continue to fight, continue to look for ways to make it, and then continue to reach out to resources such as the SBA, our partners such as the Small Business Development Centers, SCORE, and these other service providers that are really out here that make this network that's in place to help you move forward in business. This is a great team, great resources such as Emprise Bank, the local chamber. So you've got an enormous amount of help, and understand that we're all advocating and fighting for you, and we look forward to getting through this, and I think it's going to make our community much stronger.
Thanks, Wayne. I think you're absolutely right. Robin, as you have closing comments, I think you have a unique perspective. We've talked about it before, both as a current business owner and a current lender. You can probably speak a great deal to how the world works today. What kind of encouragement would you have?
I think Doug and Wayne both said it really well. Don't give up. Hang in there. Communication, I know with our business, communication with all of our members, and not only just communication with our customers, members, but also with our bank. Just talking about what's going on, how you can help. And then looking at, Wayne mentioned it as well, opportunities. What are those things that we can do now that we maybe didn't think about before as a business owner, that here's a new opportunity for us to grow as the country has changed. Who would have thought that we would be doing Zoom meetings like we are now, and just, you know, reinventing the wheel. So I think those are some great opportunities for the future. The SBA, again, has some great programs now for helping businesses once we are starting to get back to normal, hopefully soon. Think about that. Is there something that you could do to enhance your business or start a business? So instead of, you know, this is a great time for opportunities, and you will see a lot of people succeed. So don't give up.
Very good. Thank you, Robin. I appreciate it.
Thanks.
From my standpoint, I think from an encouragement standpoint, it's been very refreshing to me. Even though I don't deal with customers directly, I've been able to see the loans that have gone through our system. I know for a fact that we funded payroll for a restaurant that is now open for delivery that wasn't open prior to the opportunity for the PPP funds to be deposited in their account. We know that there's a construction firm that was ready to lay off staff that now didn't have to because PPP loan was available to them and we were able to fund it. But I'm also not immune to the point that there are lots of people out there who still need help. And I wish that we could wave a magic wand and everybody would have everything that they need as soon as they need it. But I would just stay with everyone else and say, make sure that you continue to fight the fight and push forward with it. Be very open with your lenders. Be very open with anyone that you choose to work with from a vendor standpoint. And as everyone has spoken, everyone will have the opportunity to come over and come through this in a better place. So Angie, I think that's all the four of us can offer for you today.
That was absolutely wonderful. Andrea, we want to thank you very much for your job in moderating. And of course, Robin, Wayne, and Doug, want to thank you for your time, your expertise. I know you took time out of your busy schedules. You have a lot of customers that I'm sure are in your inbox and your emails right now. So we appreciate that. And we want to encourage everybody to use the chamber as a resource. We are here as an information resource, and we have a number of other sessions that we have been doing, as I mentioned before, and those are all curated on our Wichita Resource Center, which is at wichitachamber.org/COVID-19. So please go and check that out at your convenience, and you'll find a wide variety of topics there. So again, thank you to everyone for tuning in and viewing, and have a great day.